So, ladies and gentlemen, good afternoon. Hope you're all well. My name is Collins Isaiah, founder and portfolio director at Procured Property. Firstly, just thought I'd introduce myself. First time I'm doing a video in the group. But more specifically, I wanted to give you my sort of thoughts and insights into the most recent report from HomeTrack. Now, HomeTrack, they're one of the UK's leading company for sort of the insights into the property market, data, stats, pretty much all things property when it comes to tracking the performance of it. And they provide reports for property developers, institutions, retail investors. And last year, in the early stages of the pandemic, when we started to go into lockdown for this first time, they were supporting and helping lenders and banks with automatic valuations. So when at the time RIC surveyors or the surveyors couldn't actually go out and survey the properties, they were providing automatic valuations, which helped a lot, and of course helped a lot of these lenders. But more specifically, I think the report was really interesting. They do their reports in arrears, so the report is for February 2021. So this month we're in now in April. At the end of this month, we'll get the report for March, and that's usually how it works. So it was really interesting. Year on year, there was a high house price growth or inflation at 4.1%. So the market's still growing strong. It's still going in the right direction, which is down to many different things. We recently had the budget, that announcement that came out, and that stimulated over 80% spike in buyer demand, which ultimately meant that there were 80% more people interested in buying a property because of the extension of the stamp duty holiday, which is now extended into the summer, which allows for more people to plan ahead, of course, and work out, right, if I buy property now, am I going to be in time to complete before the stamp duty holiday? Which has led to a lot of people flooding the market, which ultimately means at the moment the market's slightly stalled in terms of inventory and stock. There aren't as many properties being listed on the property market, which means demand for properties have gone up, prices have gone up, bidding wars have begun, and people willing to pay above what they are worth, which is good if you're a seller. If you're an investor, means there's a lot of competition at the moment in the marketplace. But if you are holding on to your portfolio, it's just, of course, there's been demonstrated growth up and down the country. I'll give you a short sort of breakdown of 20 cities. At the moment, we have Manchester, Liverpool, Leeds, Nottingham, Leicester, Sheffield. These are major UK cities, Birmingham included. And I'll give you an example. Birmingham done really, really well, performing at 4.1% year on year in February. We had Leeds performing at 6.4%, Manchester topping it off at 6.6%, Liverpool 6.4%, Leicester 5%, Sheffield 5%. So the market is completely going against the tide. Many people thought going into 2021 there will be a dip or some sort of haircut. But all that's happened is the government is obviously supporting the market through all this stimulus and also the support of deferring the stamp duty payment that you have to make. In fact, sorry, not just deferring, just completely, wiping it out for your for property that you're looking to live in up to £500,000. So it's been really interesting. Of course, people up north have benefited from this. With the average property prices being, less than £250,000. So they're absolutely they're in a pole position to benefit from the tapered extension. But as such, HomeTrack, they do expect continued upward pressure on pricing in the north and the Midlands as demand increases, supply decreases, which I think most people expected. The data also signals that a reassessment of homes among sort of existing homeowners is set to continue. People are reconsidering. I know there's a few big blue chip companies that are turning around and saying, you don't have to come back into work this summer, and a lot of the leases are coming to an end. What that means for commercial property, that's a whole nother conversation in itself. But as we draw closer to the end of these leases, many companies are considering whether they should bring their workers back to work. And lots of people are reconsidering whether they should look at somewhere with more space, and of course to be suitable for the new needs that they have now. But of course, as lockdown starts to ease and COVID-19 cases recede as well with the rollout of the vaccine, this was a major thing that was going to impact any market, whether that be the stock market, property market. The rollout of the COVID vaccine, the faster they can roll these out, the better sentiment is going to be in the marketplace and confidence for things to return back to normal. We also had the unemployment rates come out as well, and various different numbers and figures that will support the market, which I'll probably go into in another video at some point. This is just driving more confidence in the market, and of course, we're yet to see some more supply come to the market as sellers feel more comfortable inviting potential buyers into their homes. This in turn will lead to more activity in the marketplace and more opportunities. But like I mentioned, this could put increased pressure on sales and completions. Of course, the whole process, something buyers will have to consider in mind as we move closer to summer. But ultimately, all these factors will support activity levels and, of course, headline house price growth up to the end of Q2 2021. So, while all the prospects for the housing market over the year had, ahead of us will improve, the pathway out of the lockdown and the route to the full reopening of the economy and the unwinding support measures is unlikely to be simple or smooth. We're yet to see the reality of, for instance, furlough to be rescinded. What happens when that all goes away? What does that look like for landlords who have tenants on furlough? What does that look like for people who have taken out mortgages? And of course, will they be still in a position to afford this? But without that, taking that into account, we still expect house price growth to moderate later this year. But overall transactions, let's say, to get an additional boost from the stamp duty measures, will of course keep the market in the right direction. But I think if you look at the property market like a cake or a cupcake, what will happen over the next 9 months to 12 months, for example, we're still going to have the principal, which is the cake. I think the icing may take a slight haircut. That will probably be sliced off, but ultimately we feel the market will stabilize itself. The insanity with outbidding and crazy offers and of course the demand will ease and things will return back to normal. But if you are a property investor, someone looking to invest over a long period of time, what happens over the next 12 months isn't going to affect you over the next 8 to 9 years. As long as you're buying correctly, you're approaching it with a little bit of science and strategy, things will work itself out, providing you follow that process. But that'll be all. I think it was a very good read. When I looked over the report, there's more to it as well. What I will do is consider, depending on, of course, time permitting, maybe putting together some sort of webinar and going through the property market over the next 12, 14 months. What are the opportunities available to you if you're someone that's considering getting into the market? What are the things you need to look out for, the things you need to consider, and how to prepare before you get into the marketplace? But I hope you found that useful, and I'll see you all in another video. Thanks again.